Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hello, Rogue Nation. Well, not quite Rogue Nation, but hello, folks. We are glad to have you here. We are going to be talking a little bit about oil today and about OPEC. And so we thought we'd start off with that. But Brian, have we got anything to start off with besides going directly into OPEC?
Well, what we're going to take a look at, and I'm just going to take a quick flyover. If you don't know who Energy Rogue is or what we do,
I don't even know who that guy is on the picture.
I don't either, but he seems pretty happy about it. But he seems pretty
excited.
happy. Yeah, he's excited, and you should be too, because until Energy Rogue, there has been nothing out there serving people with data, information, interaction, and just a wealth of insights into natural gas, crude oil, refined products, electricity, NGLs, and so much more. We offer a subscription service. $89 a month gives you access to all of our interactive downloadable charts. And if you want custom insights into what your problems are in the energy markets, you can join Rogue Premium. $179 a month. You get access to our Discord channel where we talk about the markets every single day. Am I missing anything?
Well, like our Discord channel, but do we offer Ginsu knives with this stuff? I mean, it's just, I just feel like we ought to be offering that, and that's not all. Because
but you do get T-shirts. You know, if you join, you get some T-shirts.
Great,
and if you want to check it out, just go to EnergyRogue.com and click on this merch, and you'll be able to buy whatever merch. But if you join, you tell me what you want, we will ship it to you. So, commercial over.
First T-shirts on us.
First T-shirts on us. Would love to have you join us. We have been growing, and if you're one of our subscribers, really appreciate you every single day. And thank you, because we started this journey a couple of years ago, and we've just been so excited and pleased with the access and the participation and reception that this has had. So thank you for being a part of the journey. And if you're not part of the journey, come join us. We're changing things in the energy industry a little bit at a time.
Also, folks, if you have any questions during this, please post in the comments. We will get to them. I promise. Even if we make fun of it, still get.
Yeah. So today we're going to start off with a little bit about OPEC. OPEC decided and announced that they were extending their cuts. And we actually track inside of Rogue Edge for $89 a month. If you're going out, downloading spreadsheets and spending time constructing spreadsheets, if you come to Rogue Edge, you can sign up and click this image, and you can export it, use it in presentations, so on and so forth. But we track. Here is what OPEC has looked like since 2022. They went from 35 million barrels a day down to 33.
So now this is the traditional OPEC as opposed to OPEC Plus. Is that what we're talking about?
That is correct. That is correct. It does not include OPEC Plus. This is traditional. And so most of this delta is Saudi Arabia. If you look at what they're doing, the heavy lifting right down here, you can see they went from 2022, 11 million barrels a day down to 8.9. And we're going to detail out every country. If you stay with us, we're going to be here probably about 30 minutes, but we will accept questions and stay on longer if you have questions. So feel free to ask them, as Bill said. But Saudi Arabia went pretty much from 11 down to 9 million barrels a day. Russia, well, that's a different one altogether. In February 2023, they were at 10.58 million barrels a day. They're down to 9.9, which is on track with what we have. Well, January, they're actually down a little bit, 9.5. So 9.5 million barrels a day in January. This comes from EIA, and this is on a lag. This number comes from OPEC, and this is what is observed in the marketplace. So the real question is the quotas and the additional cuts, are they enough? So what we did is we took a look at January production numbers, and then we took a look at the quota and their committed additional cuts in addition to the quota. And what we found is in January, we're close to 800,000 barrels a day behind the quota minus the additional cut. That's not a surprise. January, there was a lot of shipping activity. There was a tanker that was sunk in the Red Sea. Plus, this is the time where a lot of refineries are turning around and taking fewer inputs. So there's going to be a stock difference in play. February barrels are probably going to tell us a little bit more, right?
Right. It's going to. We haven't really had any normality since in this year at all, as far as how the product is moving across the oceans. And so what we're seeing is people, when you see quotas and you see people say, well, we're going to do some additional cuts. Sometimes that's actual cuts, but most of the time it's just that they haven't met their quota.
Whatever you do, don't fall asleep.
That's exactly right, especially during this podcast. So usually what happens is it's easy to make cuts if you're not making a quota. And so
Right.
if your production is below your quota, well, that's not really cut because you're producing as much as you can. It's just not meeting your quota.
Well, but that's the reason that watching what OPEC does is super important, because what you can see is Saudi Arabia is doing the heavy lifting here. Most of the quota, most of the additional cut, Saudi Arabia is doing the heavy lifting here. If they don't feel other members are falling in line, they could do what they did in 2015. Was it 15? 2015, and once before, I can't remember what year, but in 2015, they just said, you know what, we're just going to let it flow. So, but they need a stable price to balance budgets. I said every single country on here wants as much as they can, but it's a volume and a price. So they could produce more, but then the price goes down and hurts what's remaining. So if we
so
take,
what's interesting to look at this is every one of those quote countries are state-owned oil companies. And so in the U.S., where we have privately owned oil companies, you don't see this type of heavy-handedness as far as on the quotas and various stuff like that, because we have that's the beauty of our system. So, but when you're dealing with the OPEC countries, you just realize that their motivations to produce and not produce has more to do with their state policy than it does their profits.
yeah. Or said a different way, if they keep $80 if they keep $80 barrel of crude in play, I'm just running some quick math here. They're losing roughly $40 million by cutting the 2 million barrels a day. But what would the price be if they let those 2 million barrels a day on the remaining 9? That's the calculus that Saudi Arabia has to think about is, well, if I let it fly and oil prices go from 80 to 40, well, I just shot myself in the foot. So
Right.
maybe that $40 million is not worth it to let that extra 2 million barrels a day. I say 2. Their stated cut from their quota is 1.5, and they're currently right on top of it. What they have cut to. Russia is a little bit behind in January, but that's not a surprise. So the real question that we're going to be taking a look at is not so much on supply. OPEC countries are going to want to bring those barrels back on. It's going to be
Right.
on demand. And in January, OPEC stated that the global crude oil demand was 103 crude oil and natural gas liquids and liquids is
Right.
103.3 million barrels a day. McKinsey is saying it's 100.4. So if you total up the non-OPEC supply and the OPEC supply, we're coming up with 101.78. So if McKinsey's more on target, then we're roughly balanced, and that explains why crude oil pricing has been. Let me pull up a separate dashboard. That explains why crude oil pricing has been pretty static and really not transitioned to anything there. Let me take a look at the future crude oil financial and thinking. There's basis, and all of this is on our platform, and you can have for only $89 a month. But what you can see here is pretty much since December, we've been in a range of 70 to 80. Now we are trending up, and what you can see is we are trending up, and we're running into a little bit of resistance on this $80 level. But that's the reason is because OPEC's moves are stabilizing the market. So the rest of the year, I view it as a pretty stable, static story unless demand gets hit, because a lot of this growth expectation, it's kind of interesting because when we can see a big difference between what OPEC said the world demand was in January and what McKinsey said. What's fascinating to me is a lot of people were saying that the demand growth that OPEC was projecting 2 million barrels a day was overdone. McKinsey has the same growth target, roughly, maybe a couple 100,000 barrels a day different. So what's fascinating to me is that even though their demand numbers are off for January, they see the crude oil market growing and expanding, and we're seeing that on all the data sets that we have. And we'll also
So
about
demand has been pretty much always growing. We've never really seen a big dip in demand except for during the pandemic in
right.
2020.
Yep.
That was the only time we saw a reduction in demand, and that had to do with the lockdowns in the various different countries.
Yep.
And so, but if you look at over even the last 10 years, you start seeing this demand continue to increase. And that's because we have developing countries who want the same standard of living as all the other developed countries. And to do that, the cheapest, the most dense fuel to do that with is through crude oil and gasoline and natural gas liquids. And they're easy, and they can import those. And now that we've seen the LNG coming in, that's even a whole nother area, but we're not going to talk about that today. And so when you look at world demand, the demand isn't, I mean, we have demand growing in the United States, but not like can happen in the developing countries who want that same standard of living for them, and they will not settle for less.
Well, I mean, if you look at mature economies in the West primarily, you look at Europe, you look at the United States, you look at Canada, they are in the process of moving away from crude oil, trying to lean into renewable sources. So a lot of mature economies that trade crude oil believe that we are going to peak on crude oil. And that may be true in advanced economies, but these developing economies are going to come through with growth like we haven't
Right.
seen before.
And they have the population to grow very quickly.
Well, I mean, that was one thing we discussed on the Gulf Intelligence podcast last night was the fact that all eyes are on China right now, but nobody's really paying attention to what's happening in India.
Right.
India has been growing year over year over year, and yes, they have been taking crude oil from Russia, taking crude oil from Iran, and ultimately they're going to do what is necessary to advance their economy because their choice is consume this energy and have electricity, have cars, have heating, cooling, having all these things or not. It's not a choice of this or solar panels or
Right.
this or a Tesla. It's, well,
And by the way, they're doing all of that.
yeah. Yeah.
It
And
just
well, because they're embracing one of the things that we have been promoting, which is it's not fossil fuels, it's not renewables, it's both. It's how we fit them together. Because the fact of the matter is, our energy consumption across all electricity, transportation, utilities, heating, cooling, all of this is going to take energy. So it is an all of the above answer.
Brian, went back when I was working with a friend in the electrical side. One thing that they always looked at is they wanted the right source for the right sink. And in electrical terms, the source is the supply and the sink is demand. And so whatever source that was appropriate, both economically and available, was applied to the sink. And
Right.
so that's what Brian and I talk about all the time, is that it's not, a lot of people say, well, it's an all of the above thing. No, it's not an all of the above thing. It's what works the best where you're at.
Yep. Well, let's take a couple minutes on that note, since we're discussing OPEC. We're going to go country by country. Some of these countries have some interesting things going on. This chart is from 2017 to 2024. Let me zero this into right before COVID. So a lot of people are looking at the Nigerian growth. Well, it's growth from 2022. It's actually been in contraction, and this is where they have pretty big refinery coming in. Is that right, Bill?
Right. They've got a, how big is that thing? It's like 600,000 barrels a day coming in.
Yep.
And I think it's 650, to be honest with you. And they're doing that because they're importing refined products, and they find that what they want to do is refine the crude oil in their own country and be able to have access to not just specific loads of refined products, but all of the refinery, all the products coming out of the tail end of the refinery. So that's what they're doing. They're switching over, instead of refined products, they're importing crude oil. And that refinery is supposed to be up, I want to say, at the end of this year, first quarter next.
I thought it was going to be earlier than that. Well, we'll check that out and report back. But let's take a look at Libya. Libya has been pretty stable during that same time frame. Let's take a look at Kuwait. Kuwait has been pretty stable. Venezuela, there's a lot of discussion on Venezuela. Let me change this scale. And yes, they've grown, but most of that growth was back before everybody was really talking about Venezuela.
Right.
So if you look at this chart, all of this growth was from COVID to 2021. Now, what people are looking at is this: are they going to get back up to this level? Well, I mean, they're
When
already up to 760,000 barrels a day.
how far back can
Um,
you go on this, Brian?
I think this as far back as the data
Okay,
has. Um,
because Venezuela,
there's some
they
annual data that goes a little bit further back, but
they tend to nationalize things when you're not looking. I know back in the 80s, they nationalized several private oil companies that were working in Venezuela. And so they just basically took the assets and then managed to run them poorly. And so I think what happened here leading up to this has more to do with their politics than it does their reserves.
I got you.
On that big
I got
slide
you.
down. On that big slide down.
So I just pulled up this one because the EIA didn't have that data source, but this is back to 1973, and you can see that we were at 3.498, and the last time that we were pretty high was 2.88 in December of 2013. So my view is Venezuela is going to take some time. That we're not going to see a big impact in 2024.
Right.
So that's my viewpoint. Let's take a look at UAE. UAE has been pretty stable. Iraq is another one that I want to take a look at. There's been growth here. Let's take it back to this filter. Pretty static. You know, again, all the heavy lifting that I see is on Saudi Arabia. And that is truly the variable to watch. The two variables to watch are Saudi Arabia and Russia.
Mm-hmm.
And feel
Right.
free, folks, to ask some questions. We're going to be on here for probably another 10 minutes, but we are going to be fielding questions. So if you have some questions about what some of these levels are or where you can get access to this information, we'd be happy to help you. This is one that I wanted to talk about. Iran. Iran has been quietly growing, and as a matter of fact, we have it right down here. And you can see from 2022, they were at 2.5 million barrels a day. They're up to 3.2, which is pretty close to what I deem their, let's see, again, this chart takes us back to 2016 levels. But what you can see is they've recovered most of the way to their pre-sanction levels. So they're at 3.2 million barrels a day versus 3.8 before sanctions really came in. So I don't see much inventory of new growth, crude oil production growth. That said, everybody's looking at the U.S. to fill that engine, and we're not going to dive into it today, but the U.S. production produces 13.3 million barrels a day. As a matter of fact, let's scroll up here. This this has been the chart since last October. And bear in mind, we had a wave of completions on oil and gas completions from October to December. And maybe we ticked up 100,000 barrels a day, which, if you peel away the surface, it's because out of 13.3 million barrels a day, we're declining over 600,000 barrels a day. That means it rests on what we can bring on in new production, which has been roughly about that same amount. This is a chart that we track that gives us a forward indication of where we are. And this basically says since June of last year, we've been treading water.
Right. Being flat on that. And the other thing is that with the shale discoveries, the U.S. has been exporting more oil, and that is going into the world market. So so people are seeing some competition from us on the export of oil, and really that's almost what is that, about a 5-6 year phenomenon that
Yeah.
we've been exporting.
Yep.
And so that oil is going after, mainly because we don't have the refinery capacity to refine it.
Yep. Yep. And right now, our leading indicator is showing that we are declining in the Permian. So I expect to see our flat production price or production levels start to taper off. And when I take a look at this growth, if this 2 million barrels a day does show up, that's going to be filled by OPEC. That's not going to be filled by the US. That's my 2 cents. So, do you think I'm right or wrong on that, Bill?
Like I said, I don't think we're going to have the capacity to fill it out of the U.S. based on the amount of rigs that are going right now.
Right.
I think you're going to have to see, before the rigs make another significant leap as far as getting bigger, you're either going to have to see more efficiency out of the rigs, which is, I think we're pretty much at the top end of that.
Even in the future, nothing works.
And technology can change some things on that, but that's what we got to see. And then the price has got to move up in order to be able to
Wait, no, wait. What'd you say? Got to be able to what?
in order to deploy the technology, the price has got to move up, because any new technology just means it's going to be more expensive to drill.
Yep. So, so listen, we have not received any questions. We are going to start to wrap things up. If you have any questions, spout them out. We just covered what some of these OPEC countries look like from production side of the equation, and Russia, Saudi Arabia, Iraq, these are big variables to watch. And the other countries aren't quite meeting their quotas. So when we take a look at, when we peel things away from the surface, I don't see a optimistic production profile increase. A lot of analysts and a lot of people will point to this chart right here, and right there. So they will say from COVID, we went from 11 million barrels a day up to 13, but it took triple the rigs to get there, and those rigs have started to come off. So we are facing declines, and I would argue that by the end of the year, we'll be below 12 million barrels a day, unless rigs are starting to get activated, and I don't think they are. So,
all right, we don't have any questions right now, so I got one question for you. Actually, it's a question for Elon Musk.
Elon.
Yes. If
you know, we're live streaming on Twitter. I'm not calling it X. I'm not. I'm not going to do that.
He's an angry elf.
You launch your car into space, and it accelerates to the speed of light. If you turn on the headlights, does anything happen?
She gets kicked by a mule, they go back to normal.
I don't know. I don't know the answer to that. Well, listen, hey, thanks for watching. If you learned something, please please comment, let us know, and let us know if you have some ideas of topics. We come up with topics every week. We wanted to cover OPEC because they just extended their production quotas for the remainder
quota
of
cuts
the
anyway.
Yep, the remainder of the year. But one nuance is Russia only committed to June. So so you got to look a little deeper on the surface there. But all of this is going to rest on demand, and demand in China and India are important variables to watch. Our opinion on, or my opinion, Bill and I don't have a company opinion, but we have our different opinions. My opinion is we're going to see the U.S. Crude oil production start to decline, and it will start to speed up this year. So listen, we did have one Hey, Richard, good.
This was a conspiracy. They'd have to get all those people to lie.
Yeah, Richard, good to see you. Thanks for always showing up. Really appreciate you watching. So listen, we're gonna wrap it up there. Let you get back to your day. Let us know how we're doing. Really appreciate your comments.
And if you're watching on YouTube, be sure to subscribe.
Yep. So listen, thanks so much, folks. And I think that's all I had. Bill, do you want to impart some wisdom on? And don't tell me about flying cars again. What?
No, it's not flying cars. I'm just telling you, I think all of this has to do with the lizard people in the moon. And
Yes.
we're going to have to do a podcast on that one time.
Yeah, we are because it's all connected. It's I mean, the moon is hollow, and for
It's
anybody
really
that is
special.
watching this, I am being incredibly sarcastic right now.
That's
So
right.
please.
And if you don't believe me, just talk to a doctor. Now talk to you about your lizard brain. That ought to get you a little nervous.
So listen, folks, thanks for watching. Really appreciate you. We will see you next week. If you have any ideas for what we want, what you want to hear about next week, let us know, and we will see you then. Don't forget, free t-shirts if you join.